Ladies and gentlemen, good day and welcome to Sonata Software Limited Q2 FY23 Results Update Conference Call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Srikhar Reddy, Managing Director of Sonata Software Limited. Thank you, and over to you, sir.
Thank you, and good evening, everybody, and welcome to the analyst call post the announcement of our results for FY23 Q2. The results are updated on our website. Today I have with me Mr. Samir Dhir, the CEO of the company, Mr. Sujit Manji, CEO and MD of our subsidiary Sonata Information Technology Limited, Mr. Jagannathan, CFO, Mr. Roshan Shetty, Chief Revenue Officer of the company, and Mr. Satyanarayana, Head of Finance. What we will do today is that we'll have Mr. Samir taking you through the international services operations, Mr. Sujit then taking you through the highlights of the India business, and Jagan will take you through the financial highlights, and then we'll open up the forum for Q&A. So over to Samir.
Thank you, Srikhar. My name is Samir. Good evening to all of you, and a very warm welcome to all of you for this conference call to discuss our strategy and goals, broad industry updates, and the financial results for Q2 quarter ended September 30th. Thank you for joining us today. We all appreciate your valuable time and support. First of all, I'm very excited with the opportunity to lead Sonata Software into its next phase of growth. I've taken the baton being passed to me, and to work hard to make Sonata an IT powerhouse in time to come. The team at Sonata is really excited and working judiciously to accelerate our growth curve and really build for scale. And scale in terms of large deals, large clients, markets, partnerships, and talent. That's what really we are focused on as we move forward. So let me cover with you some broad strategic goals that we are working on and the goals around them. So given the market potential, we really aim to double our international business in the next 4 years or so, and be known in the industry as a specialized firm in modernization and digital engineering. We are committed to focus on our strategy and making investments in sales, investments in large deals, capability build, partner ecosystems, all that to really become one of the fastest growing companies in years to come. We are in interesting times right now as an industry. We really see 3 secular trends in the market. Number 1, we continue to see enterprise modernization, and enterprises really focusing on growth platforms which will drive their revenue up. That growth or that trend is really intercepted by clients modernizing their digital platforms, improving their customer experience on their platforms, and unlocking the power of data through analytics and AI/ML. We believe that's a significant trend in front of us as a company to harvest and continue to build on that. The second trend we continue to see is leveraging technology to strengthen compliance and security. And we're really bullish about that with the capabilities that Sonata has built over the years. We think we are rightly positioned to capitalize on that trend as well. And third, quite very importantly right now, to continue to build deep engineering talent, which is specialized and not generic. We really have prided ourselves over the years to build deep engineering talent in the company, and that's something that we want to continue to harvest upon and continue to intercept the market on the trend. Now, if you have a question for me and say, Samir, so how are you going to build for this growth? And I think the answer to that is really focusing on the verticals that Sonata has been traditionally strong in. We have been traditionally strong in high-tech industries, manufacturing, retail, and travel verticals. As we go forward, we are doubling down to scale our BFSI and healthcare life sciences verticals. We're really spending investment dollars in the continuous investment dollars in BFSI and healthcare verticals to strengthen those verticals from a vertical point of view. The second investment we're making is in our sales and marketing across the globe in USA, Europe, ANZ, and APAC. We really continue to strengthen our sales organization, account mining, hunting organization to really build out a world-class sales organization and really empower the teams with the cutting-edge, bleeding-edge digital tools to be most efficient and really continue to add value to our customers. The third side of building scale from a growth perspective is really to continue to focus on modernization and solutions. We've been very strong in our platformation framework. We've been very strong in the data and cloud side, automation side, and that's really where a bulk of a focus from a modernization transformation will come from, really harvest the strength of Sonata in the past and really continue to build on that and gain market share rapidly in the verticals that we're focused on. So that's really our high-level blueprint to build scale to be ready for the growth that is in front of us. If you have a question for me which says, how do we build engineering talent go forward? What are we doing different to really build out the capabilities that are needed to gain more and more market share? My response to that will be, we're really building talent ahead of time and not be surprised with the growth. We really continue to, with our plans to hire lateral talent, we are continuing with our plans to hire fresher programs. We are building out development centers in European geographies and other geographies where we're servicing our clients. We continue to also invest deeply in personalized training for our engineering teams. Depending upon the track they are on, we continue to invest dollars to make sure that we continue to harvest and nurture talent which is best in breed from an engineering perspective. All this keeping in mind that we are also expanding into tier 2 and tier 3 cities and keeping diversity and inclusion as a main focus from a talent build-out perspective. So we really continue to make sure that we have a very diverse workforce and a global workforce as we move forward. As we have embarked on this strategy, which is really a continuation of our past and build out the future, we are beginning to see some early success in this front. I'm proud to share with you that we closed out a very large deal in the current quarter. This is with a Sweden-based manufacturing conglomerate who are a leader in access products. This is a company which is in 95 billion and over in revenues. So we think as we close this large deal out, we'll continue to farm and radiate this customer. And really the nature of the work is at the heart of what Sonata has stood for over the years. This is a customer where we're going to modernize their systems, accelerate their business transformation, bring in sales efficiencies and channel efficiency, real-time customer engagement, not only with customers but suppliers, distributor engagement, and all this in an agile, transparent manner. And this is really what we are very happy about with this win, because it sets up the foundation for us for a very large European customer. But beyond that really is harvesting our investments in the modernization space. The second win, marquee win that we had this past quarter was for a SaaS-based talent management and development client, which has over 6,000 customers spread across 180 countries. And for this customer, we're really implementing a solution to modernize the current suite of products on AWS platform and doing their modernization work, doing the cloud modernization, product lifecycle management, and really getting them ready to adopt the infinite power of the cloud platform from a cloud-native development perspective. So we're beginning to see early offshoots and success of the investment strategy that we have put out, which is all towards the scaling the platform from a growth agenda perspective. Now let me cover very briefly the market and industry update. Despite some macro concerns that have been talked about in the industry, so far from a service demand indicator perspective, our outlook is very strong. We have seen some decisioning delays, but overall the demand environment seems robust. Our pipeline continues to grow, and we continue to drive growth from a pipeline perspective with our clients' platforms, which are very growth-oriented. These are customer-facing platforms, revenue-facing platforms for customers, and they're all underpinned by work in the cloud, data, and automation space. And this is again a big cornerstone strategy of Sonata, so we can harvest the momentum as we move forward. With that, let me move quickly to the Q2 update. So we had a good strong performance in the most recent quarter. Our international service revenue will grow 1.7% sequentially and 16.9% Y-on-Y. On rupee terms, 5.4% sequentially and 27.6% Y-on-Y. In constant currency terms, we witnessed 3.9% sequential growth and 22.8% Y-on-Y. Our operating margins are at 25.7%. Beyond numbers, this quarter we also added over 850 employees, out of which we have also kept our promise for the inducting freshers. Out of the 850, 300 were freshers. And we are also beginning to see tapering down of the attrition. This is the quarter we saw attrition come down by more than 2 percentage points within the quarter compared to prior quarters. With that, in summary, we're very excited about our long-term prospect of our growth. We have started taking steps to invest in the business and strengthen our sales and solutions to gain the market share by building scale ahead of time. We aim to be in the top 25% quartile of revenue performance in the industry in time to come. We expect the momentum to take off in about 3 to 4 quarters, and all our investment initiatives are really built around that to continue to build a very strong and robust order book and pipeline. Thank you. With that, let me turn it over to Sujit for his comments. Sujit?
Thanks, Samir. Good evening to everybody, and welcome to this call. As you have seen from the results, we had a fairly good quarter. On the EBITDA side, we had a 40% year-on-year growth. From the Indian market perspective, with most of our customers, we continue to see their investment for digital transformation. And most of our customers, this process continues even during this quarter, as well as we believe that going forward, this initiative from each of these customers will continue for some time. This gives us an opportunity to have more business on the hybrid infra and on the cloud infra, and that is what the focus we have as a group. And with most of our customers, we are working with them in their digital transformation process and helping them to build up their hybrid and cloud infra, which is required to deliver a good digital experience to their customers as well as for their process. From segment perspective in Indian market, I think IT/ITES, BFSI, pharma, these are the industries which are, where you can see really good cloud consumption growth. And with whatever our interaction and experience we have with these customers and as well as with most of the our cloud providers, we believe that this trend is also going to continue. In Indian market, various of our customers at various stages of this cloud adoption process, and as you must be knowing that this process consists of various stages. In the initial stage, most of the customers go for lift and shift, that means on-premise to cloud, and after some time they go for multi-cloud, and then they go for app modernization, and towards the end, to get the best result and output, they'll go for data modernization. So as a partner, we would like to be a strategic partner to each of our customers in each of these stages, and that is what is our business goal, and we continue to work on that. We continue to focus on our large annuity and platform contracts. Almost, a major part of our business comes from our existing customer in form of annuity contracts. Almost 85, our annuity renewal rate is almost 85%, and that gives a lot of comfort for the future business. Currently, various hyperscale cloud providers in India, they are having a lot more go-to-market initiatives with partners as well as directly with customers to propagate their cloud platforms and to make sure that there is a larger consumption for each of their cloud offerings. And we are taking advantage of that. We are trying to work with each of them. We are trying to have more and better GTMs with each of them so that we get a larger share of the business. That's from me. Thank you so much. Hand it over to Jagan.
Hi, thank you, Sujit. Good evening, all. Thanks for joining for this call. Now I'll take you through the financial performance of the company. Start with the consolidated performance because this includes the India and the international revenue. I'll cover the revenue of international business separately and domestic business separately. With regard to the important pointers for the last 12 quarters, the CQGR of EBITDA growth as well as the PAT growth has been consistently high. We are at 3.4% and 3.8%, which reflects a very strong profitability, continue to have a very, very strong industry-leading profitability in our business. That's highlighted here. The next is the international business. Now we have to talk about the revenue growth. This quarter, as Samir mentioned, we had a US dollar revenue growth of 1.7%, but the constant currency was 3.9%, which is in the top echelon of the revenue growth for this quarter in the IT services space. Our profitability continued to be very strong. Our PAT growth has been consistently high. The CQGR of our PAT growth has been 2.8%, and we reflected strong profitability of EBITDA of around 25.7%, which is the industry-leading EBITDA for the business. Coming to the domestic business continued to do well. As mentioned by us, please measure the domestic business as the growth of absolute gross contribution rather than as a percentage of profitability and revenue as a growth because that's the turnover for the business. We wanted to measure the business on the absolute amount of gross contribution and this growth on that. We continue to grow this business very well, and this business gross contribution again has grown quarter on quarter very well. Coming to the financial summary of this is the breakup of the financial performance of the various both international business and the domestic business separately. This has been shared with you. We can take questions later whenever the questions comes in. And key operational parameters, there is no major changes in the operational parameters. Few of the geographies like Europe had an impact because of the cross-currency impact was reflecting on the percentage of contribution. This is like an aberration because of the strong movement in the currency during the end of the quarter. The same has been reflected in a couple of verticals also like retail. Otherwise, there is no major movement between the same. The on-site offshore mixes again a small change in that of on-site offshore mix. Again, the cross-currency impact on on-site revenue has been there to some extent. Otherwise, this is we don't expect this is like an aberration. We don't expect this to change much in the coming years. Coming to the other vertical, we have continued to have a strong client addition. We have added 12 customers this quarter, and we continue to focus on further growth. We expect that the strong performance to continue for the remaining part of the year. And with this client additions, we expect the growth to be propelled in the coming quarters also. With this, I complete my financial update. Hand it back to for the questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, to ask a question, you may enter star and 1. The first question is from the line of Baidik Sarkar from Unifi Capital. Please go ahead.
Sameer, gentlemen, good evening and tight set of numbers given the cost environment. Can I invite your comments on how much of growth was perhaps left on the table unfulfilled due to ensuing supply side issues, A? And B, are we on track for reaching all of that starting Q3? I ask this question because I understand the outlook is decent and so was this quarter's constant currency number. But in Q4 of last year and Q1 of this year, I reckon we had left a lot of revenues on the table, upwards of 2-3% from what I recollect. So apart from organic demand visibility, how is the recovery of what we've not built and we've not executed looking like?
Your voice was a little feeble. Can you repeat the question, please?
Sure. Repeat the question. My apologies for that. I was seeking to invite your comments on how much of growth was perhaps left on the table, unbilled, unfulfilled due to the ensuing supply.
Sorry to interrupt, sir. Sir, are you using any earphones? I would request you to please speak from the.
Well, I think this must be better.
Yeah,
I'll just repeat my question again. My apologies for that. I just wanted Sameer's and the team's comment on how much growth was left on the table unfulfilled due to supply side issues. And are we on track for recouping that starting Q3? I asked this question because in Q4 of last year and Q1 of this year, there was upwards of 2-3% growth that was not billed and not executed because of supply side issues. So your comments on that and if we can see a strong recovery from that perspective starting H2. Thank you.
Yeah, so I think I got most part of the question. Thanks, Baidik, for asking the question. The broad answer is it's in the mid-teens number somewhere, around 15% or so approximately. I may not have the exact number, but it's somewhere in that zone that probably is still not fulfilled because of the talent supply constraint that we continue to see.
Right.
Of course, it varies a little bit by technical skill set. On the more modern technology is probably slightly higher, and perhaps the more traditional technology is slightly lower. But on the average, if you want to get a ballpark number, I think I would say probably around 15-16%.
Sure. So given the intake this year and given how our intake for Q3 is also poised, but when do you think, Samir, we can bridge that gap, or do you reckon, we wait a couple of more quarters to see if you guys can catch up? How's the bridge looking like?
Yeah, no, I think we're sort of making good progress, Baidik. Like we said, we have continued with our investments in the fresher program. Despite all the macroeconomic concerns, we have not slowed down our investments from a campus hiring perspective. We're continuing to do that because the demand environment is robust. We believe, I think in the last call we had said it will take us about 3 to 4 quarters. I think at this point in time, given the easing off of attrition, we think it's about a couple of quarters away before we can completely tide over it. So we're getting better and faster now.
Great. And I'm sorry if I missed this on your opening comments, but on the large deal size, congrats on that. Could you perhaps quantify the range of these 2 large deals that we won, and what's your spectrum of large deals in terms of value?
Yeah, so we don't share the numbers of the deals itself, Baidik, but I think in general our yardstick is these are 3 to 4 year annuity contracts, which are multi-year in nature and generally transformation in nature. So that's really how I would qualify it. These are fairly large contracts in the industry, and I think the more focus essentially is the more focus is to get the annuity contracts increasing as we move forward, and hence this deal is a marquee deal for us because we are really ticking off that box to continue to build the platform from a scale perspective on annuity side, Baidik.
And would it be fair to assume that these deals have been won in the same margin band that Sonata's IT services has been delivering? Or how should we view this from a margin perspective?
Yeah, they are in the same margin profile. In fact, the deal we just closed is probably higher than the average margin profile. So they're pretty good margin profile leads for us.
No, that's great to know. Nice to say hello, Samir. My best wishes, and I'll be in touch. Thank you.
Thank you, Vivek.
Thank you. Participants, to ask a question, you may enter star and 1. The next question is from the line of Chirag Kacharia from Ashika Institutional Equities. Please go ahead.
Sir, I have a question. Like, we are migrating from Salesforce to Microsoft platform. So there are many peers who are also offering Salesforce platform. So how this Microsoft offering will give us edge in the client ecosystem and the acceptance from client side for the same? If you could throw some qualitative insight on same.
So your voice was also not very clear. Your question is if you're migrating customer from legacy platform to a Microsoft stack, what is Sonata's differentiation? Is that the question?
Yes, that is the question.
Okay. So I think, just going back to the comments I made earlier, see, we have been very strong in our platformation techniques. That's been the cornerstone of Sonata for the last several years. We have built out and invested in that framework and capability over the last 6-7 years. And that's really at the heart of this whole success that we are beginning to see now in the market. Why that is important? Because it's not just about migrating customers from legacy to on cloud, lift and shift, but it is also transforming their estate to really drive meaningful insights from a customer data analytics perspective. It is also about modernizing and unleashing the power of cloud so that development cycles can be faster. It's also about driving the automation along the way. It's also about shedding the legacy code. It's also about moving to a more modernized CI/CD DevOps pipeline. So it's the whole stack that we offer as a platformation technique, which is really inbuilt into our whole engineering DNA of the company, which continues to differentiate us against the competition.
And does Microsoft provide us any exclusivity?
Well, I think we have built ourselves our own differentiating tools, framework, and IPs over the years, and that's what really differentiates us. Of course, Microsoft endorses it in many of these engagements, but there's no exclusivity. If that's a direct question, we have differentiating rights because of the investment we have made over the years in these areas.
Okay. And sir, can you throw some light on macroeconomic environment challenges which we are facing in execution, and also client side spend commentary in such uncertain time?
Yeah, so like I said, I think overall the demand environment is still pretty robust. Our pipeline continues to grow. We're continuing to see our pipeline grow in line with our results that we just announced. So I think we are very happy with the progress we're making. In addition, we're very happy with the progress we're making on the order book side. Our order book continues to be very strong in general. The momentum is very strong. Of course, there are some decisioning delays given the macroeconomic conditions, but those are sporadic at this point in time. They are not concerning us as we move forward.
Okay.
And that's true for all clients across the globe at this point in time. That's our general market observation at this point.
So you are since quite long in the industry. So if we compare a current slowdown with what we have seen during the GFC and post that, is it similar nonsense or a bit different this time?
I think that's $1 million question. I wish I had an answer for you. I think things are developing at this point in time. Like I said, we are not seeing that slowdown at this point in time, but we'll keep the audience informed as we move forward. At this point in time, we are hunkering down and continuing to maximize the opportunity in front of us. Our investments are in that direction, our market momentum is in that direction, and we are continuing to build out the company as we move forward in that direction.
Okay, so thank you so much. All the very best.
Thank you. Participants, to ask a question, please enter star and 1 on your touchtone phone. The next question is from the line of Aegis Lakhani from Unifi Capital. Please go ahead.
Yeah, hi. Are you able to hear me?
Yes.
Okay. So my question is to Mr. Mohanty. I'd like to understand how we should model the scale-up of your products reselling business, because we haven't honestly seen this scale of, sequential profitability growth. So I'm really sort of looking to understand how deep and long is this runway. And, H2 is usually significantly, there's a significant scale-up that takes place in H2. So should we expect the same?
Yeah, hi, the market, as I explained, during my initial comments, the market looks attractive in the sense that most of the Indian customers, they have a plan and they are spending on the cloud. And if you look at this software reselling now, it measures spend is on the cloud spend. And that's what I said, that the way we are looking at the market and we are observing the market, I think the cloud expenditure of the customer will continue to grow for next couple of quarters for sure. That mainly because most of the customers' digital transformation program is still on. And as I explained to you that when the customers are migrating to cloud, there are various stages, and it does not mean that from on-premise to they move to cloud and the program gets over. After that, there are various stages in terms of from a single cloud to multi-cloud, where they actually try to select the right cloud for the right application. And once they have multi-cloud, then the complexities regarding security, multi-cloud management which comes in. And after some time, the customers also start realizing that the applications which they have moved to the cloud are not giving the optimal results because they are not architect for the cloud usages. So there are a lot of app modernization opportunity which comes up. And after a customer goes through a major app modernization session, and then they also realize that just not app modernization is going to do everything for them. It's also required some data modernization. So that is the fourth phase which also comes in. So it's a long process. It's not just moving to the cloud. So because of this, we believe that there are various stages in which a partner has the opportunity to work with customers and have a good business. And that's the reason we believe that market is there and we will have opportunities going forward.
Got it. And sir, usually the second half of the year has more sales and significant scale-ups is there. So is that, what do you see as the revenue visibility there?
Yeah, I would think it will be a good H2, that's what we believe.
Sorry, could you repeat that?
Yeah, we believe that we'll have a good second half.
Okay, got it. Thanks. That's
Thank you. Thank you. Ladies and gentlemen, to ask a question at this moment, please enter star and 1. Next question is from the line of Sameer Dosani from ICICI Prudential AMC. Please go ahead.
Hi, thanks for the opportunity. Just to understand, right, what we hear from industry experts is that retail and manufacturing as a sector has been struggling economically. So IT spends in these sectors we hear is more vulnerable. We have a decent exposure, right? So retail is like 15% in our IT services, and 20% is distribution and manufacturing. So how do you see the trend in this business specifically? And if you can highlight or quantify where is our tilt? Is it more on the project implementation, more on annuity? If you can just throw some light on this. Thanks.
Sure. Thanks for the question, Samir. I think there are two parts to this. The bulk of the work we do for our clients is really transforming their core systems. And we are in many ways defining their future modernization agenda. So those programs that are in flight are continuing at this point in time. So there is no let up. Of course, there might be some sporadic cases, one or two clients here and there, but in general, the business momentum that we have seen in the first half of the year is continuing into the second half of the year. We're not seeing any slowdown, and that includes retail and manufacturing distribution included. Now, from a net new pipeline perspective, there have been some decisioning delays, but I would say they are just delays by a month or so. They are not like the projects have been cancelled or stalled, and we're continuing to watch that space very keenly. Our pipeline build-out, as I said earlier, is continuing to be strong, and order book continues to be strong. At this point in time, we're not concerned about there's nothing outlier about the behavior that we're seeing in the marketplace. It's very consistent, what we would have normally expected in an environment like this. So it's not concerning us, at least at this point in time.
Understood. Thanks for the answer. And when I look at your, I'm not sure whether we disclose it. I don't think we disclose it. What is the utilization trend? Because we have hired a substantial number of headcount now, 800 in this quarter. And I think I look at your utilization of billability, if I'm not wrong, that is the metric that you disclose. We don't see any impact on that. Could you explain how is that utilization changing? And if you can also highlight what is the kind of number of freshers that you would have hired till now, and how much are deployed from that? Yeah, thanks.
Yes, we'll answer the last question first, Samir. We have added about 290 campus minds in this quarter, and we have in that 200 people have joined in September and 90 have joined in the month of July. So this 90 people will be deployed in the project probably by next month. They have 3 months training period. The other 200 people are under the training now. Coming to this, most of the additions during the quarter have been lateral replacement additions. And our utilization remains the same because we have put in the process of effectively, as Samir was mentioning, the demand on the pipeline is good, new project additions have been good, new customer addition has been good. So we are continuing to have a good utilization, what we call it as billability. So that is continuing to be good at remaining at 82% for the company.
So sorry, I couldn't get the number. So out of the 290 freshers, how many freshers have been added in the September month?
September is 200.
200. Okay, so the full quarter impact of this will come in next quarter, right?
Next quarter, correct.
Okay, correct. Okay. And out of 200, how much? Out of the 280, how many are deployed?
No, our 90 are completing their training in the month of October, that is this quarter. Understood. In this month, they are being deployed into the project. Understood. 200 will complete it by November, December, so they will be deployed at the end of Q3 or beginning of Q4.
Understood. And just to get a sense, how many freshers have we hired in H1 as a total? If you can give that number.
Total number of freshers we are hiring is about 550 for the year.
Okay. This is the target you're saying, right?
Yes, this is the target, correct.
And how many already hired from this 550?
Half of them, right? 290 is already hired.
Okay. Sorry. So 290 was the H1 number. Okay. Thanks for the and last question, sir. If you look at IT services as a business, right? Q3 is where we look at where we are is the weaker quarter in the sense that furloughs and the budgets are running out. So overall, how do we expect Q3 of our business to turn out to be? If you can throw some light on that. Thanks.
You are talking about international business, right?
Yeah, international business. Yes.
Demand continue to be good for continue to be there. There are but Q3 the holidays furloughs impact can be there a little bit. Number of the working days will be 2 days lesser in this quarter. But traditionally the last 2 years has been good for us. Q3 we hope to continue the overall performance in the same direction.
Okay. So no unexpected. Okay.
No unexpected.
Okay. Thanks for the update. Thanks.
Thank you. The next question is from the line of Romil Jain from Electrum PMS. Please go ahead.
Good evening, team. Am I audible?
Yeah.
Yes, sir.
Yeah, sure. Sir, one question is, we have talked about platformation being a very important part of the overall strategy, and obviously that will lead to further scale and benefits on the business side. So what kind of margins do we expect when we go full throttle, maybe 2-3 quarters down the line? So just want to understand the margin picture on the international business.
Yes, I think the gross margin profile of the business is very consistent on all the platformation programs, Romil. I think we don't see any impact of that. I think the platformation programs are accretive and in line with the overall gross margin profile of the company. The investment that we are making are generally going to sit below the gross margin line, but we will continue to make those investments, and those are not new. They have been continuing for the last 5 years. So we'll make investments pretty much in line to what we have been making in the past 5 years time frame.
Okay. So should we see some margin benefit, or broadly we will be in this range?
It will continue the same ballpark.
Okay. Secondly, on the competition, just to understand the deals that we have won, broadly they would be against larger peers. So if you can give some flavor of the competitive scenario there, what we are seeing in the bid pipeline right now, as well as again on the competition, the platformation that we do, can others also try and do that, or obviously we have some differentiation, but what stops others also in following similar pattern?
Yeah, so it's a good question. I think for most of the work that we do, Romil, I think we compete with the large tier 1 companies. These are global players, both India-based as well as US and whichever geography you're competing in. If it's a European client, it will be European-based competitors as well. So these are all, the frontline competition that we typically see. And that's what the large deal that we just won was against that fairly stiff competition. Now on the platformation side, I think this hasn't happened by accident or overnight, right? As they say, success is created over the years. So the last 5-6 years of sustained investment that Sonata has made to really differentiate into the platformation techniques and tools and framework is really a culmination point. And it's not just about the framework, it's about training your staff. It's really about wiring that whole DNA in the company to live that mission and vision every day. It's a fairly long process. Can everything be copied? The Toyota saying everything can be copied at some point, but it takes time. And we are continuing to invest, so we know by the time competition catches up in maybe 3, 4, 5 years' time, we would have leapfrogged to the next level of evolution ourselves. So we're not concerned about that. We believe we have a unique sauce to continue to differentiate in the market in that sense.
Okay, that's good to hear. Sir, one question on the acquisitions. So just want to understand, as we mentioned, we are going to double the revenue in broadly 4 years on the international side. Does this include any inorganic acquisitions also, or it is purely organic?
Yeah, I think that the strategy is to grow the company. We are not averse to taking acquisitions along the way, Romil, if we find a suitable property which is in line with our overall broad strategy that we laid out to you. I think if we find a property, we'll take it, but it is not picked upon as a constraint to do that. It has to be thought out M&A. If we have to do, we'll do it, but it has to make and meet our strategic goals. It won't be for scale.
Okay. So that means this would be broadly organic, is what we can assume.
I wouldn't qualify either way. It really is how the market develops. I think we'll have to see how the market develops and how the opportunities present. But our aspiration is to double the company for about 4 years, and that's what we really head down focused on. And along the way, if an acquisition makes sense, we'll do it. If it doesn't make sense, we'll do it organically.
Got it. Sir, can I just ask one more question?
Yes, please go ahead.
Yeah. So in terms of the overheads, okay, obviously in COVID, a lot of travel and everything had gone down. So in current quarters and going ahead, are we broadly at a normalized level in terms of all the other overhead expenses?
Not exactly. Still, the people have not fully come back to the office, but the travel is increasing. It will not be like last year. It will be the overhead cost will go up this year, but not to the pre-COVID levels still. We expect like it will take another 3-4 quarters at least to get there. But working from people coming back to office and working from home is a larger industry problem. So that requires some time to solve.
Okay. Thanks a lot. All the best.
Thank you. The next question is from the line of Krishna Thakkar from Anand Rathi. Please go ahead.
Yeah, hello sir, Mohit here. Just wanted to check, is there a reclassification as far as your disclosures are considered vertical-wise in Q2 versus last quarter?
Q2 versus last quarter, which vertical specifically?
For example, I see this drop also in travel vertical, and then there is some number change in OPD or ISV. So therefore, is there some part of revenue which would have gone from travel to ISV or something like that?
No. Travel has come down because of the cross currency, because our travel is majorly Europe.
Okay. And so in the last quarter PPT, the percentages were little different for Q1 versus this time. But as per you, there is no reclassification that must have been.
No reclassification. This is only because of the cross currency impact of various currencies that has impacted in few of the verticals.
Okay. And sir, just one thing on the ISV, we have seen this sharp pickup. So I may have missed it little earlier, but what drove this and what is the outlook there in ISV particularly?
Yeah, so let me build on the first question first and I'll answer the second question. So in terms of the volumes in travel and other verticals, it's grown in line with our overall numbers, but because of the cross-currency impact, you're seeing the numbers go down in travel specifically. On the ISV side, I think our product engineering heritage continues to be strong. So the ISV that we continue to build out their core platform, which are their revenue generating platform, there is no let up. And we continue to build that momentum out, and hence we are continue to see the market momentum in that direction, Mohit.
So this is something which you think is not project driven essentially, and we should see the momentum building up ahead.
Yeah, I mean, yes, absolutely. That's our expectation as we move forward. The market momentum holds up, and that's what we're seeing at this point in time. And the product engineering work that we do for various ISVs and transformation work we do for them is absolutely the pipeline is there to continue to build that out.
Perfect, sir. Thank you.
Thank you. The next question is from the line of Sameer Dosani from ICICI Prudential AMC. Please go ahead.
My questions will be answered. Sorry. Thank you.
Thank you. Participants, if you wish to ask any questions, please hit the star and 1. We have a follow-up question from Chirag Kacharia from Ashika Institutional Equities. Please go ahead.
Sir, other than Microsoft tab, what other platform we also plan to launch in future? And are there any discussion or negotiation ongoing on that front?
So if you are asking from the alliance perspective, currently we have partnership with Microsoft, Google, AWS.
Okay. I'm asking from a point of view of mitigating the revenue concentration risk. That's why.
Okay. So it's from a sell-to point of view. Sorry, Chirag, let me take that. So I think as we scale the platform forward, and I talked about it earlier, we're really continuing to invest on logos that can scale for us, and that's the whole sales investment thesis that I covered earlier, Chirag, in the commentary. So we have logos in the travel space, we have logos in the healthcare space, and that's what we're really focusing on to scale those logos up as we move forward and work on the diversification topic that you're on. That's something that we are judiciously working on. We believe it's a two-year journey. It will take us to diversify the business, but that's what we're focused on. And even the new logos that we're doing, the must-have account that we have is really all about Fortune 2,000 to 5,000 companies, so that these logos have the potential to grow out for us as we move forward. It's a very significant focus we're driving as part of our go-forward strategy from a radiation point of view and new logo acquisition point of view to work on that aspect.
Okay, thank you.
Thank you. Participants, if you wish to ask any questions, please enter star and 1. As there are no further questions from the participants, I now hand the conference over to Mr. Srikhar Reddy for closing comments.
Well, thank you all very much for joining the call today. Thanks for your continued support. I look forward to hearing from you in future conference calls. Thank you again for joining today.
Thank you very much. On behalf of Sonata Software Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.